moment around 2:56 p.m. Eastern. That's when Powell left the door open a crack by claiming that the American economy isn't overheating and that it would set the markets aflame. Listen.
I would say that is to some extent down to looking for broader economic, heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation.
Okay, that's the inverse curve between unemployment and inflation. Here for his first reaction, Wharton School of Finance professor emeritus Jeremy Siegel. Professor, there was the anticipation of a hawkish cut, a perhaps sort of wise owl tone, or, of course, the dovish, let's cut rates more. What tone did he take? Is it somewhere in between?
Well, it was less of a hawkish cut than I thought.
Right.
He certainly didn't guarantee that the path to cuts is going to continue, but there's no question. First of all, the statement that they're going to begin QE, mild QE, Treasury bill buying in 2 days, way above what the market expected, and that was, I think, one of the things that right on the announcement that came at 2 o'clock, because kind of surprised people. Oh, wow, they're stopping the quantitative tightening. Okay, that's good. And then secondly, he was less concerned about inflation than really I've seen him in many, many meetings. And although he certainly didn't say that, he said there was two sides to, and he could make either side about whether we should cut or not. He, for the first time, really said, hey, whatever effect we're getting from these tariffs, it's temporary. I mean, I wish he would be saying that a year ago. I mean, and I think, there would be better guidance on the Fed. But he is admitting that these tariff cuts have certainly not produced anywhere near the inflation that the Fed and many others had thought. And he thought we had worked our way through most of that. And so there is some push up on goods. But when he looks at the services, he sees some very, very favorable trends.
That tariff comment jumped out at me, too. It was in answer to our own Edward Lawrence's question. And in essence, he said, the tariffs, he said temporary. Listen, we can forgive him for being a little hesitant about saying those things because, of course, it was the inflation is transitory that got him into trouble a couple of years ago because it wasn't. It held on. It was sticky. But in essence, he said, if he doesn't see newer tariffs, if the president and its administration does not slap on new tariffs, he said, I could see this all coming back down with inflation next year, back half of next year.
Yeah.
That's significant.
Yeah. I think that's very significant. Listen, I had been arguing that from the very beginning, that the effect of a tariff is like a tax. It's going to be a one-time increase, and the Fed should not be reacting to that one-time increase. Now he's saying it more than ever before, because that's what the data is telling us. And that recognition is certainly very, very positive. I think he should have had some of this recognition earlier on. Nonetheless, it was not as a hawkish cut as I thought. With the end of QT coming early and with the idea that we're going to look at the market. Also, by the way, I think, Liz, it was important to talk about, he thought that the jobless, the payroll numbers, instead of plus 40,000, are actually negative. And that comes from what we call the birth-death model, which has to do with the number of firms created. And he said that when it gets revised, we will see slightly negative numbers. And that, of course, jives with what we saw with the ADP number that did turn slightly negative. And he said, that's a cause of caution in the forecast. I think I was surprised to actually get an explicit number on those payrolls from him at this meeting.
Let me just show you what's happening right now at the White House. President Trump is having a meeting with CEOs, everybody from IBM to HPE, Qualcomm, Dell, talking about AI. That topic also came up. Is AI really helping the economy? He conceded that it was, he meaning Jay Powell. So that is certainly what's keeping things on certainly, I wouldn't even say an even keel, it's an elevated keel. I mean, this is a rising tide lifting quite a few boats. But back to the tariff issue, you know, there was a headline about Switzerland. Switzerland came out, the government, and said there is now a deal to drop the 39% tariffs on Swiss imports to the United States down to a ceiling of about 15%. So in a way, what I think Jay Powell is seeing is that, yes, the tariff story is a moving and moderating picture. Still, though, you had a lot of CEOs, you had a lot of the voters, in essence, saying that a lot, I guess, I mean, 3 dissented. The last time we saw 3 dissenting was in 2019, still under Powell, but that's an unusual situation. And we can tell you that among the dissenters, you had 2 of them who thought, don't cut at all. We need to stay paused. And that, I believe, was Austin Goolsbee and Jeffrey Schmid. I think we have a graphic showing who did what. There we go. And then Stephen Myron, he's the newest on the board. He actually dissented because he didn't want to see a 25 basis point cut. He wanted to see a much bigger jumbo 50 basis point cut. To the tone at the Fed, everybody thought this would be contentious. I thought so too, because Powell knows that President Trump doesn't want him in the chair for much longer. Let's listen to what he said when asked about the dissent and the tone of it at the Fed.
The discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views. And you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation.
Thoughtful and respectful. We know that there are candidates now narrowed down to possibly just 3. We're not sure, but Kevin Hassett has been named as a possibility. There are words that Kevin Warsh, the former Fed governor, is being interviewed at some point either today or tomorrow. Can you just put on your guessing game hat and let us know who you think is really best positioned to get it?
Well, you know, I'm resistant to go against Polymarket or Kalshi or those. They're pretty good. Those prediction markets, which still has Hassett pretty high up, I guess, in the 70s. I know Kevin Hassett very, very well. I worked with him on the John McCain campaign in 2000. He's an excellent economist. He would be a good choice. If I had to choose, though, I think Kevin Warsh is really, he has the institutional history as well as great credentials, as well as Chris Waller. I think Kevin Hassett is better on the fiscal side than on the monetary side. He would still make an excellent governor. All 3 of them would, I think, make very, very good governors. If I had a choice, though, I would maybe just push towards to Kevin Warsh on that side. But I guess the front runner, I mean, Hassett is a very loyal Trump supporter. He's a very positive, very smart man. I still think he probably has the inside track.
Who has better hair, though? I mean, this is what Trump does. There is the hair factor, I will say. I'm kind of with you on Warsh, and I think Bob Diamond, who came on this show, former Barclays CEO, he was putting his money on Kevin Warsh, but you just don't know at this point. It will be one of those decisions that only President Trump will make. Professor Siegel, good to see you. Thank you so much.
Thanks for having me, Liz.